Hi everyone, the Abstract Investor here. In this video I want to cover the charts for CVS Health Corporation, but before I get started, we'll do the disclaimer. I'm not a registered financial advisor, lawyer, certified professional accountant, or real estate agent. The content of this video and all other videos on this channel are the thoughts of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk. Do not invest any capital unless you understand and accept those risks. If you need financial advice, please contact a certified professional accountant or a registered financial advisor. So let's do this. So here's the CVS chart. So ticker is CVS. I've got it on the left side of the screen on the daily time frame from back in the mid 90s to early 2000s, and on the right screen I have it from kind of the 2005 to today range. Now, before we start with this one, this was one of the charts that I noticed the repeating pattern shortly after 3M. So I wanted to do a video on this one as well. You can get the idea here of the two tops from, what was that, February of 99 and February of 2001 to August 2015 and February 2022. Now this is kind of a fun one for me because it actually has some gaps in it, and those gaps on the lower time frame on the larger chart for 2024 show up in a really similar way. So that's kind of exciting for me, and this is one that's on my watch list right now. Not a lot of people are excited about CVS, but I guess I'm maybe one of the few. So anyway, we can get doing some charting here. Obviously we've got our lows. Now, before it started to go up again in, what was that, April of 2003, I'm just going to draw this line across here. That kind of gives us our lows. I never try to capture the exact lows on any of this because I think you're potentially losing out on opportunity to invest in a company at a great price by trying to bottom fish the exact bottom. So I don't try to do it. I just try to get somewhere close to what I think might be the bottom. And then I hold those positions and let them ride. So for this one, that's kind of there. I'm just going to get off the weekly time frame on the newer pattern. Maybe let's put it on the daily first. You can see that gap there that I was talking about, but we'll get into that in a second. So I wanted to come, that's that. So I'm looking for what where this line ended up as a potential bottom. It kind of came down here around that $11.30 mark and touched the top of those. So yeah, it's probably around here. It's probably around here actually. I'm just going to mark that off. Mark that off there, and you can see we're actually pretty close to that. So with this pattern from kind of the .com era, it didn't, the middle didn't dip quite as aggressively. I guess it still dipped pretty good, but not quite as aggressively as it did for the COVID lows. It came at it again here. It actually works out pretty well. You can see 1, 2, 3, 1, 2, 3 kind of lows before it pumped up again. And yeah, sure, it chops around just like this, chopped around, and then that little shelf, and then up to the top, just like this little shelf, and then up to the top. But that's okay. I'm not too worried about that. So come down here, and you can see that's what we've got going on. I already have an alert on this chart if price crosses $52.55 to the downside. Then I'll be coming to the charts and checking it out. Now I want to get into these gaps because this part is kind of fun. I'm just going to go to the 4-hour time frame. Now you can see from the top this gap down and just sort of gave us this dead space right here, and then it came down again. This top doesn't look the exact same as this other one. It actually came down and gave us a gap down from over here, and then this kind of free floating island right here, just like this free floating island over here on the left. There's this free floating island right here. And then if you look at the next pattern down, and kind of did this down, up, down, and chop. And this pattern came down, down, up, down, up, down, and kind of chop. So in my opinion, the way that, again, you kind of have to take an abstract perspective on some of this stuff, but this one here actually looks like this one, and this one look pretty similar, but you don't get to see it. If I switch to the 4-hour time frame on this other one, I don't have the premium charting subscription for TradingView because it's pretty expensive, so I just have a basic account. But if you try to look, so see the history, this dinosaur here, history stops at 2008 on the 4-hour time frame, so I don't get to look at the 4-hour time frame for that one. I have to stick to the daily, and then I can get back here to, let's see, it'll go all the way back to, oh wow, it's going way back for CVS on the daily. 1968. Wow. So anyway, back to the patterns. This pattern right here, even though it looks very similar to this one, so does this one. So, and I'm actually inclined to believe this pattern is a little bit more similar to that one. So I'm going to circle that one too. And then as you can see, it got quite a big gap from $15.75 all the way down to $13. And then it started to create a base in October of 2001, and then it went up and came down and came down. It hit the lows multiple times. So this isn't actually a stock that as soon as I see this come down here, if it does, or as soon as this alert goes off, that doesn't mean that I'm buying this stock. I'm actually going to be looking for this pattern to play out like this. I'm actually going to be looking for a little bit of a replication of this, but in the pattern of today. So this is what I'm looking for, and when I start to see this pattern play out, then I will consider buying into CVS, but not before, because I don't want to ride all this. And I mean, potentially if I think that I find a low here, then I might try for a more short-term trade on CVS and maybe hold that for the spike up. So if it was to come down here at all into the 40s at all, and then it came back up and got over 63, then I'd probably sell it off and let it take its time to come back down. And then, I mean, on these smaller patterns, this happened within 2 years, this basing formation. On these larger patterns, it can take a little bit longer, or on some charts I've noticed that it's quicker, or it'll completely deviate. So like the Apple chart from the 2000s, when the stock was less than $10, to what it is today, the pattern is playing out differently. So that'll be an interesting one when I get to that video for you guys as well. But yeah, for now, I will just do this, put it back to the weekly potentially. There we go. And yeah, you can see, actually I can fit them both on the same little screen here. You can see the tops, the trough in the middle, and then kind of down here. So I actually think that this shoulder here, or sometimes I use the term shelf, I think that this is this one. So I'm just going to delete that. Get rid of that. I guess I could have used that, just resized it, but whoops. So yeah, that would be what that one looks like. So yeah, I'm looking for price to get to $50 or lower, and then I'm going to be looking for this basing pattern to replay. And if I see this starting to occur, even if it's higher up, even if it doesn't happen much lower down here, like at the $45-ish range, even if it happens up here quite a bit more, then I will take that as, okay, it's basing, and it's not actually going to go down as far as it did in 2002, 2003. So, but yeah, that's it for CVS. It's one that I think is fun to chart. It's exciting. It shows off the pattern repetition really well. And I hope you guys enjoyed it. See you in the next one. Thanks.